welcome to some more fun with Fitzy. I'm happy to tell you we are now starting Chapter 4, the simple ledger. Ledger accounts. Let's talk about the accounts first. Ledger accounts. An account is a page specially designed to record the changes in each individual item. And what I'm talking about here are our actual accounts that we've been using so far: cash, supplies, accounts receivable, so on. And as you know, every business transaction, some of these accounts change. So a ledger account is this page that records each of those changes. Okay? A ledger is a group or file of accounts. In the olden days, we used to say it's a book of accounts. Now that we are more technical, we save it in a file on the computer. As we were just discussing, a ledger can take many forms. Some companies in the old days used cards. Paper and binders was the most common, and now we use electronic files. And we're going to be spending some time in this course going into the lab and using accounting software. Each individual balance sheet item is given its own account. And when we get further into the course and we start talking about the income statement, each item on the income statement will have its own account as well. Typically, you would have one account per page, and we talked about that in the last slide. The dollar figure for each balance sheet item is recorded in the account on the first line, and I'm going to show you this on the next slide. This is the beginning balance. Okay, so when you have your balance sheet, you're going to take each of the balances beside the account names, and you're going to call that the beginning balance in your account. You're going to ensure that you record the dollar figure on the correct side of an account. There's a left side and a right side, okay? This is really, really important. Left and right. Okay? And if you're having trouble remembering left and right, hold up your left and right hands so you can see the back of your hands facing you. One of them, your left hand, will make an L with your index finger and your thumb. Your right hand will not do that. The ledger and the balance sheet both show financial position. If you have a ledger, you can prepare a balance sheet. If you have a balance sheet, you can prepare a ledger, and back and forth. Okay, here is what the accounts look like. Down here we have a few. They are called T accounts. We're going to be using T accounts for now. And most accountants, when they are talking with other accountants, they use T accounts all the time. Okay, very, very common. So remember the accounting equation. Assets equals liabilities plus owner's equity. Well, what I need you to take note of here is, which side of the balance sheet do you find assets? Well, we've done assets, and we know that assets are found on the left, and liabilities and owner's equity are both found on the right. Just like the fundamental accounting equation, assets equals liabilities plus owner's equity. Assets are on the left. Liabilities and owner's equity are on the right-hand side of the accounting equation. This is really important for you to help remember, okay, how these accounts are going to be set up. Where would you normally find the ledger balance for assets? Well, because assets are on the left-hand side of the balance sheet, on the left-hand side is where you're going to find the balance, okay? And so on, liabilities are on the right-hand side, and owner's equity is on the right-hand side. So their balances will go on the right. This will make sense to you as we go on. Okay? So the beginning value for assets goes on the left. Do you see how this clearly is on the left of that line? And on the right for owner's equity and liabilities. Okay, so let's put this into context so it makes sense to you. Here's a balance sheet. Take note. Cash, $3,265, and so on. Remember we said there's a left side and a right side? Left and right? Well, remember all of these accounts here on the left side of the balance sheet have a normal balance on the left. And all of these accounts on the balance sheet have a normal balance on the right. Okay? So let's set up those accounts. What you're going to do is you're going to put a bunch of T's on your page, and you're going to put the names of each account on the top of them. keep in mind our fundamental accounting equation, okay? All of the accounts that are on the left-hand side of the balance sheet, which are assets, will have a normal balance on the left. So that number I just told you about in cash, we're putting it on the left side of the cash account. And so on for the rest of the assets. Okay, let's look at the balance sheet together. So cash goes on the left, accounts receivable, those two numbers go in the account. So this 150, you're going to put in the left-hand side of your T account. And for our Van Loon, the 620 goes on the left-hand side. Very straightforward, and so on. So you're going to notice that your supplies, your trucks, and your equipment will also have balances on the left-hand side. And likewise, the items on the right-hand side of your balance sheet are going to go on the right-hand side. So you're going to see bank loan of $18,000 is going to go right here on the right side. Okay, there's the supplies, trucks, and equipment I told you about. And all of these items on the right side have balances on the right. So again, in summary, you just took the balances on the balance sheet and put them on the correct side of the T accounts. And this will make sense to you when we start doing the transactions.